So today we're going to be speaking about the ICT Silver Bullet entry model, right? It's a model that I use almost on a daily basis. I do this because it's quite easy, it's quite effective as well, and it's usually it usually occurs frequently in the market as well. So now ICT deals with this concept in depthly in his videos, but for the sake of this video, I'm going to give a very quick and brief summary of the strategy and my approach to it. And then after that, we'll jump right into a live example of the ICT silver bullet in the market. Okay, so what exactly is the ICT silver bullet? The ICT silver bullet is an entry model taken within the 3 a.m. to 4 a.m. time period, right, on forex and stock indices. Now, quickly, there are some criteria or indications that I like to look out for first before entering a silver model. So let's go into addressing that. All right, so here's the checklist. That's the list of things I like to see first before taking a silver bullet entry. So first things first, I like to see uh, a very clear trend to a specific direction on the higher time frame, whether it be bullish or bearish. So when I see this clear direction, the next thing I do is to go down to the 1 minute chart and wait for the 3 a.m. silver bullet sweet spot and wait for a sharp displacement to the direction of the day. Okay. So when I see this displacement, next thing I do is to wait for that displacement to leave behind a fair value gap. Now, for those of you who don't know, what a fair value gap looks like, here are some examples. All right, and then finally, when I'm done seeing a fair value gap and that fair value gap has been filled, next thing I do is to mark out the target for the day. So where exactly am I expecting price to reach first before I'm comfortable to close my trade? Usually it's a relative equal high or low, right? Usually it's could also be significant highs or lows that hold so much liquidity, or it could be fair value gaps, especially high time frame fair value gaps. All right, so here's what the checklist is going to look like in practical terms. Okay, so where we have, for example, on the high time frame, seeing that the market is bullish and the trend is bullish. So the next thing to do is to wait for the 3 a.m. period to reach. So this gray vertical rectangle signifies the 3 a.m. to 4 a.m. time period, right? Okay, so normally we would like to see the market trending like something like this. Okay, so when the 3 a.m. period reaches, we would like to see a displacement to the upside. It doesn't really need to take out liquidity. It may, and if it does, that could be a plus. But if it doesn't, it's not a problem. So when that displacement occurs, then the next thing we want to see is a fair value gap left behind by price by the displacement. And then next we want to see price go back to fill that fair value gap. Okay. Yes, and then stop loss below the displacement and then take profit at the target. After the fill, we typically want to see price then rally to our destination. So that's for a bullish market. Same applies for a bearish market. So you typically would see the market trending. When we approach the 3 a.m. period, want to see a displacement to the downside. Then we want to see the market leave behind a fair value gap. Then I want to see price reach into that. Stop loss just above the displacement and take profits at whatever target that we are expecting to hit. And then typically you would see a bearish move down to the downside. So with this, let's see a practical example of this play out on Nasdaq. So this is basically a video footage of the trade execution management and the exit of one of the silver bullets entries I took last month. This was on the Nasdaq. It was taken on 27th of January 2025. All right, so what we can see here is that preceding the market open on Monday, price was exceedingly bearish. Okay, it was falling heavily to the downside. And when I saw this, I was really interested in taking a sell. So my bias for that morning was bearish. Okay, now having identified that my bias was bearish, next thing was to plan and to prepare for the entry. So what I did was to mark out the 3 a.m. to the 4 a.m. silver bullet period, or that sweet spot where I'd basically be expecting to trade the silver bullet from. So that's why you see that vertical rectangle, white rectangle there on the screen. So at this point, you're currently seeing me placing in the profit and loss sell symbol, but that wasn't actually me trading or taking an entry. That was just me creating for myself a mental image of like where my stop loss and take profit was likely going to be placed. Okay, so I was actually only going to take an entry until I saw a confirmation to the downside in form of a sharp displacement that left behind a clear fair value gap. This was what I needed to see first before taking any action. So let's go further into the video and see how price ended up unfolding itself and how I ended up taking the silver bullet entry. Okay, so immediately it was 3 a.m. Price delivered the perfect displacement to the downside, leaving behind enough fair value gaps to satisfy the criteria for a displacement, leaving behind the fair value gap. So all that was needed for me to do next was to wait for price to return back into those fair value gaps, fill those gaps, and then I'll place my entry there and wait for my take profit to be hit. And so what I'm doing right now is placing my sell limit and my stop loss, basically the points where I would be interested in selling immediately price hits that point. So let's wait and see what that fair value gap fill ended up looking like. Okay, now even though my initial sell limit was so high up into the fair value gap, seeing currently that price on the other pair or the other instrument rather, that US30 had already filled so deeply its fair value gap, I automatically didn't expect price to reach into high any longer, so I was okay with selling off on Nasdaq from from this point. All right, so the market has started moving in our direction from our point of entry, which is great, which is good. So where exactly are we targeting? Like, what's our target for the day? So you see that one fair value gap, that big one now, fair value gap down there. Maybe price hits that, we'll be done for the day. Now, there's something significant going on here in price action that I would want us to pay attention to, and that's basically the effect that target hits, right, in correlated pairs or instruments have on each other. So what happens where one correlated pair or instrument hits its own target for the day? And though I'm going to make an even more in-depth video on this specific concept later on, but let me just make a brief intro into that concept through this video. So what we see clearly going on here Bearish action is that US 30 has hit its own target, so it has hit a fair value gap. And what we see going on Nasdaq is that that has caused a retracement to the upside, right? Usually, what that would lead to is either a full reversal for the day or a retracement, or it would lead to some stagnant or consolidation on the other pairs, whether or not they've hit their own targets. But for today, I was really, really interested in holding the trade on Nasdaq till it hits its own, fair value gap. So I was confident in holding despite, the consolidation, the Nasdaq was seeing. As you can see, these consolidations happening, this back and forth movement happening. I was still confident in holding. US 100 as Nasdaq was the leadership to the downside for the day. So I knew that at the end of the day, we're still going to hit that target, despite the fact that US 30 was already reversing at this point to the upside, as you can see. This just goes to show how important it is to always pick the leadership to whatever direction, that you're intending to trade for the day. Because that would dictate whether you would be trading a weaker pair or the pair that would be, have the most movement for the day. Okay. So obviously I'll be making more videos on concepts like picking the leadership to a specific direction, how exactly to make sure to pick the leadership in whatever trade you're taking. And yeah, you can all anticipate, those videos dropping soon because grace. But for now, this red line that has just been hit is the 1 hour fair value gap. That's our target for the day. So though I adjusted my take profit to be wider than that, but we hit our target for today, so I'm satisfied. Okay, now that is it for the live example of the ICT Silver bullet entry. If you want to see more videos like this, more live trading executions, like and subscribe to the main FX YouTube channel. See you in the next one.